So for me, the 90s are really the template I've been using for this environment. And if you look at the 90s, not just the price action, but you try and understand like how it happened, like the series of events. And it's very logical. It starts off with it was an infrastructure build out. Things like Cisco. No consumer was buying Cisco routers and
Right.
switches. That was like that was the build out. That was the infrastructure. And
Yep.
we could look at all the stuff that has been very strong recently. Stocks like Celestica or Nvidia and power companies and all that. That's infrastructure. That's not the product yet. But if you look at the internet, the first, from 1990, let's say when Cisco IPO'd, which, we maybe call that the birth of the real internet rollout, until about 95, that entire period was really dominated by infrastructure type stocks, the computer makers. And if you look after that period, that's when all of the internet products came to market, Yahoo, AOL, Charles Schwab, and Amazon, all the rest, like the output of the internet. So if we look at where we are now, and we look at, the difference today is a lot of stocks are still private and they're going to come to
Hmm.
market eventually, but they're still private. But you're seeing the changes of how we're going to new products based on AI coming to market, in that the software stocks have been terrible year to date. All of
Yeah.
the untouchable companies, Salesforce, Microsoft, they've had a terrible year because everyone's now concerned that, wow, AI is going to allow people to create so many new products at such a low cost. It's going to really challenge these massive incumbents. And so if you take a look at 1995 as an example, just to kind of picture, so what do we expect here? And it's never exactly the same, sometimes surprisingly similar. But if you look at 95, we had that very strong uptrend, and that 50% gain came after a rough 1994. There was recession worries and all the rest in 94. And again, if you were worried about the economy, you missed a 50% gain where stocks did much more. And then after we went into this kind of very long multi-month sideways choppy period where, on the chart looks like, oh, it's a consolidation, but look, there was a false breakout that probably would have gotten people excited. And then we went and broke the lower end and pretty much got people scared. And then ultimately we went back on our way. And after that, that's when Dell came to market and Yahoo and all of these crazy types of moves. And if you take a look at the current market environment, even just price chart, never mind the rest of everything we spoke about, we have such a similar dynamic on the charts. We had this massive 50 plus, run last year. We started this similar 10% correction. We just recently took out the highs. Now we're seeing weakness. So my base case here is very much that we're in a sideways consolidation that's going to do the job of shaking out all of the kind of the weak holders and those who are kind of naturally fearful. And that's going to set the stage for a tremendous uptrend to come in the coming months. I still think the rest of 2026 is going to be great. And this is really the foundation for setting that big trend up. And you can see that same dynamic, massive uptrend. We just took out the recent highs and now we're kind of pushing to the downside a little bit. So it's similar in context, it's similar in price action, and we're seeing a lot of similarities in stocks as well. So um, I'm still very excited about the future, but you have to be a realist in real time. Be like, wow, a lot of these stocks are not having a good go lately, especially like today. So that's just managing the current, but not letting kind of current shop then dissuade you or turn you off from being ready when the market is good to go again.
And I would also say that, to your point, that correction that you pointed out in 1995 was fairly mild, right? And it was more stretched out, what I would consider a plateau, as
Mhm.
opposed to when the Nasdaq topped in 2000. It had this kind of this mountain peak, right? A big move up and a very sharp move down. Just as a reminder for folks that maybe weren't around back then or weren't trading, uh, we topped on March 10th in the Nasdaq at like 5,132, and by the end of that month, you were already down 15% in just like
Yeah.
2 weeks. It wasn't like a back and forth. It was like, oh, you were already down 15% at the end of the month, and then it just got worse from there. To the point where you were down another, you were down 30% in just a month or two after that. And again, you had these rallies, certainly. I remember playing a very strong rally from, May, the end of May. There was a follow through day, and Sun Microsystems and Corning and, JDS Uniphase, SDLI, Keithley Instruments. There were all these stocks that were, doing really well, but it was short lived, and then another leg down. So it does look very different to me.
I don't, it's strange that so many people are using that as a comparison point because I don't think we see the broad kind of blow off tops and even stocks that are going kind of vertical lately like SanDisk or Micron, and they have massive earnings from a real bottleneck that is developed, and they have, if you look at their earnings, I mean, they're unbelievable, even forward earnings, because basically these AI hyperscalers are willing to pay whatever for the storage because it's a bottleneck right now. The 90s was dominated by so many IPOs and junk companies that had nothing, and then totally different. So uh, just the fact that we're kind of everyone is still pointing to that. There's this odd I feel like societal thing that's built up. And like, if you look at the data, you'll see it too, where, I've seen a lot of interesting articles where like on YouTube, a negative looking thumbnail with this same content will far surpass what is a positive messaging thumbnail.
Right. Yeah.
And so, and maybe it's the human instinct, like we're designed to
Yeah.
kind of, be fearful and protective first, but it definitely doesn't point to kind of like this widespread euphoria. I mean, if you just think back to even just the COVID bull market, like how excited everybody was and all in on Bitcoin and Tesla. And I feel like, I don't know, maybe it's my circle, but in what I read, but I definitely don't see that on a wide basis at this point. But, regardless, I think if you just look at it less from, what is everybody thinking? And you look at the process of like, infrastructure comes out, then you get new products and that drives new productivity and innovation. AI is not like, in the mid 2000s, there was like, 3D systems and, SSYS, and there was going to be this 3D printing was going to change everything. And there was no
Change
traction.
manufacturing, right? Bring
Yeah,
manufacturing back because it was going to be, do the prototypes and everything.
It was going to be this huge change, but then people realized, there's a lot of issues with it. And it never caught on to the extent that people thought. And it just like flared out and it was, localized. I mean, anyone who uses the AI and at the speed of what it's moving at and everything, I mean, it's hard to, this really is less just a product and really a platform for innovation. That's, now we're going to head into robotics and allow real world robotics and people to interact with that. I mean, what is that going to unlock? So the amount of innovation to come, and we're seeing it at such a rapid pace, very hard for me to kind of tie it with the internet. And it's so important to have the right mindset because that one, locking in that negative view will lock you out from all opportunity. Like it's happened to me. I remember, I caught Tesla early on in 2013 when it had its first leg up. And then I was trading on the desk and I remember some of the guys joking like, oh, Tesla's got the same market cap as GM. That makes no sense. They sell a fraction of the cars. For some reason that like stuck in my head, like it just sounded right.
Yeah.
And then I
You're
totally
right.
missed
That
the next
doesn't make
script.
sense.
It does make, but for whatever reason, let's not get into those. But
Yeah.
for whatever reason, like I just then I didn't respect what the market was saying. The market is always the final decision maker. And then it allowed me to miss a major move. That's one stock. Imagine turning sour on like, even let's say during COVID, you said, oh, no way there could be a bull market despite them dropping trillions of dollars of cash. You would have missed out on like tremendous like opportunities in so many stocks. So, don't get a narrative fixed in your head. Like be a trader, an investor needs to be flexible. An analyst can take a position and it's their job to kind of, stick to it and try and justify it. An investor's
Defend it.
job is to make money and just stay with what the market is saying and try and understand the market and try and impose your thoughts on it. That's the way I like to look at it.